Once I changed the following criteria, which I'm going to talk about in this video, in my trading plan and my trading strategy, my results and my strike rate increased drastically. When I started trading, it was kind of all over the place. Simply put, it was a mess. And I kind of wanted to change this. Back then I was trading 5 different time frames. Monday, I would have been trading London session. Tuesday, I would have been trading New York or Asian session. And there was kind of no structure with my trading. So when I started trading properly and I wanted to change this, a few adjustments, which obviously made it better. But I feel like what I have going on now is kind of the best way to manage your trading. And in my opinion, the most profitable way to actually manage your trading plan and your trading performance. The first point is to trade one pair. I speak about this a lot on my channel and I do think it is key. It was when I started focusing on one pair. At the time that was XAU USD, also known as gold. And every single time I look at the charts, every single time I was backtesting, every single thing that I was thinking about to do with trading was on gold. And I feel like once you know a pair and you've been trading it for a year, 2 years, 3 years, you kind of get to know the movements which are actually going to happen. I'm not going to say you know exactly where it's going to go, because if that was the case after 2 years, then everyone would just make unlimited money. But you do start to understand it a lot better than a pair you've only been trading a month. It's as simple as that. So if you're only focusing on one pair and there's only one pair on your watch list, you're never going to miss a setup. Let's say you have 3 pairs, you're looking at gold. Okay, gold's coming near to my entry. I'm going to get my entry criteria, or also trading GU or EU. Because you've been focusing on gold, you then miss a perfect setup on one of those pairs. What if that gold trade never actually materializes? You then missed out on potential profit. If you're only focusing on that one pair, you can never miss it, because if you open the charts, that's the only pair you can actually look at. There's 0% chance you can actually miss it unless you're not actually on the charts, which obviously you'd miss it anyway. And because you know the movements of the pair, you know exactly when to be on the charts, when to not be on the charts. Myself personally, the time now is 3:30 p.m. in the afternoon. I trade GU and I trade it in London session. So after 2 p.m, I'm not interested in trading at all. So I know now I don't even need to have the charts open. If there's a setup, it doesn't matter, because I know that GU for me personally works better in London session. And also, this isn't really to do with the pairs, but make sure you know the lot sizes of your positions. We're talking about missing setups, and this used to happen a lot for me. I had to go on my risk management app. I'd be like, okay, what is 11 pips or 10 pips? How many lots do I use on this trade? Whereas if you're trading, let's say a 200k account and it's 10 pips, it's obviously a 20 pip stop loss. Let's say you're trading a 200k account, you have a 10 pip stop loss and you want to risk 1%, so obviously 20 lots. So make sure you work these out before you start focusing on your trading, because you can definitely miss setups by not knowing the lot sizes, especially if you're trying to enter with market execution. Next point is trading with one time frame. Main points for this one is there's no confusion with your analysis. Let's say you're trading the daily, the 4 hour, the hour, the 15, all of these different time frames. The daily might say a buy, the 4 hour might say a sell, the 1 hour might say a buy, 15 could say a sell. Which one do you actually choose? Obviously, you're going to say, oh, the higher the time frame, the higher the more important it is, or anything like that. But in your mind, you're going to be like, okay, 3 time frames say sell, but the most important time frame says buy. Do I just neglect the 3 other time frames? Why are they even there in the first place? That's kind of my thoughts on it. And I open the chart, I go on GU, I go on the 15-minute time frame, boom, I'm never going to miss a setup. And also, you kind of want to pick a time frame which fits your trading style. Let's say you're a swing trader, you're not going to be looking at the 1 minute time frame or the 5 minute time frame. Myself personally, I like to day trade. I like to be in the trades for a few hours, up to a day or 2 days, worst case scenario. And I know that the 15-minute time frame is perfect for this. You can get really good entries, you can get a good idea of the bias, the directional bias, and you're not really on the wrong side of the market. When I feel like if you go lower than 15 minutes, as your sole time frame, you can kind of get caught up in a lot of fake moves or moves which aren't actually with the trend, but because you're so low on the time frame, you kind of get caught up in consolidation or a trending market, or even just get caught up within pullbacks and you're trying to trade against the trend. Okay, am I a higher time frame bullish and lower time frame bearish? You just have your one time frame. If you're bullish, you're bullish. If you're bearish, you're bearish. Simple as that. The next one is very, very key. Trading one setup. So many people that join my mentorship that have traded before, different strategies or even different people's courses, they might be profitable, but then they try and learn something new. I was like this at the start as well. I was trying to trade one person's strategy, another person's strategy, trying to merge it into my own strategy, where you don't really know what you're going to look for. You open the charts, someone else's strategy says it's a buy, another one says sell. Which one do you go for? If you have multiple different ways of entering a trade, they can have conflicting analysis. If one says buy, one says sell, which one do you go for? It's confusing, obviously. So if you have one setup, it can only be a buy or a sell. There's no other option for this particular setup. If it gives you the criteria to buy, you can buy, boom, enter a buy. Simple. And also, let's say I open the chart, I go on GU for the one pair, I go on 15 minute for the one time frame. I know exactly the 3 to 5 criteria which I need to see to actually enter a trade with the 3 criteria of the pair time frame setup. All those are in place. boom, the trade is perfectly valid for myself to enter. So on to the next point, and this is analyzing losing trades, winning trades, and missed trades. I think it is a McGregor quote that says, if you wake up on a win, it can be worse for you than if you wake up on a loss. And this is kind of key, because let's say you're trading and you slightly break your plan, or you slightly break a rule and you win. This is terrible, because you've broken the rule, you've broken the rule, but you've actually made money out of it. So then in the back of your head, you're like, okay, I broke this rule this time, but it actually made profit. I made money from doing this. So in the future, if that same scenario comes up again, you're like, okay, so I broke it last time, but it actually made me profit. So it's kind of okay to do it next time. This is very, very bad. On the particular back testing software or forward testing journal software, which I personally use, you can set like these grades of set criteria, which you've actually set on the website. And let's say you break a rule, you can put it to that. So when you're looking back at your analysis, you can see, okay, this one was a red one because even though I won, I broke the rules, and you can see which rules you broke. And obviously it might work for a couple trades, but in the long run, because your strategy is there for a reason, it's not ideal to actually break your rules at all when you're trading. Analyzing missed trades is very, very important also, because let's say your trades are missing out by 5 pips from your entry every single time. Maybe you're just trying to get in way too early, or maybe you're getting in too late and the trades are already gone and you don't get an entry, price is gone, TP's hit, boom, you've missed your entry. What can you do then? There's nothing you can do. The only thing you can do is look back on them and see what you could have done better and just improve for the future. Missed trades, very, very important. A lot of people, they get into trades or they set a limit, price doesn't go to the limit, they just cancel it, and then the traders hit TP, but they don't really do anything about this. If this happens quite a lot, I had this one period of time in my trading where I'd have like 3 or 4 times that would happen in a single week, and then you start forcing trades. You start trying to just enter for the sake of it, because you've missed 4 trades, all those 4 trades have won, so you just want to be in a trade. You want to have the satisfaction of being in a trade, you want the adrenaline, and you just want to see the profit and loss on your MT4. Even if it's a loss, it doesn't really matter, because you just want to be in a trade. Obviously this isn't great, but if you learn from those missed trades, you can kind of make it not happen again. So let's say your entry is 4 or 5 pips away every single time. You're just trying to get in at an entry that's too low or an entry that's too high even. It can work both ways. So you can look at this, back test, maybe using higher entries, maybe larger stop losses, but you have to sacrifice the risk to reward, but you're getting into more trades, you're making more profit in the long run. These are things which you have to think about if you're missing a lot of setups. And the last point, people are actually starting to realize this. I've seen it on Twitter, Instagram and everything. Reduced trades makes more profit. This is something which I've actually been doing for the last few months now, probably even the last year, entering maybe 2 to 3 trades in a week, sometimes even 1 trade in a week, or sometimes even 0 trades in a week. This is important because firstly, less trades equals less risk exposure. This is quite obvious. If you're only entering 5 trades in a month, you can only lose 5%. If you're entering 20 trades in a month, you could potentially lose 20%. So in 5 months, you can, instead of losing 25%, you could have lost 100% of your account, depending on your strategy. Obviously, you're not likely to have 5 months of just continuous losing trades. Very, very rare. And if that does happen, then maybe trading isn't for you, or you need to change your strategy. But obviously, for trading funded accounts, you don't want to have loads of losses. You want to pick the best setups you possibly can. And if you're trading less, you obviously have more time to improve your strategy, improve your skill set, improve your edge in the markets, therefore having better setups. Less trades, you can be more selective. You can pick trades which are fitting your plan more than the others. I have a high risk account and a low risk trading account. The high risk account, for example, let's say I have 5 criteria to actually enter a trade. If I get 3 of these, I'll enter on a high risk account. I still want to enter the trades, but I don't really want to risk large capital on these trades. For trading on a smaller account that has obviously a decent amount of money still, you're still making good profit and you're still entering the trades, but they're the higher risk accounts and you're okay with risking this amount. Then I also have a low risk account. This one is simply for just getting into trades which have 5 out of 5, perfect trade, perfect setup. You're very, very confident in risking your own money, a lot of your own money on this single setup. Simple as that. And also the main thing about having less setups, less trades actually taken, you have more free time. You can go on holiday, you can go on breaks away, do some training, get into MMA, something, whatever you want to do. Start another business. It gives you time to do this. You're on the charts maybe an hour, 2 hours a day at max, and then you can do whatever you want. That is the lifestyle of a trader. So if this did help you in any way, be sure to comment down below, like the video and subscribe to the channel, and I'll catch you guys in the next one.